from the Nigerian tax bill, the tax itself. Then the other one is from the Nigerian Tax Administration Bill, which talks about how VAT is going to be shared. And that is the only one that you hear the governors are shouting about. So
yeah, I was going to come to that, but go on.
So they are concerned about the sharing of how much is coming to us. But they did not even bother about how this VAT is going to be generated in the first place. They didn't care about that one. They didn't attack that one. So if you look at chapter 6 of the Nigerian tax bill, so there are some proposals there. For instance, VAT rates is to go up from the current 7.5% to 10% from January 2025 as proposed. Then for 2026 to 2029, it will go up again to 12.5. Then by 2030, it should now crystallize at 50%. Now, I understand why this proposal has been put forward, because when you look at in Africa, in fact, let's even narrow it to West Africa. Nigeria has the lowest VAT rate of 7.5%. Yeah. So to align that with other countries, especially with this African continental trade that is underway, it is good for Nigeria to adjust its VAT rate, right? So at that point, you say is a good idea. It is something we should do. But the truth is, like when I was writing in 2014, these were my proposals. If you read my book, you will find this proposal there. But the economic condition then is not what we have in Nigeria now. So one, you have removal of subsidy from PMS. Then there's a massive devaluation of the Naira. So when you put these two combined, you have a galloping inflation in the economy. Now, it is not wise, it's not, when you're counting policies, there are two things that you should consider. What is the objective you want to achieve? Two, the timing of the policy, you understand? So I will say that yes, the objective is right, but the timing is wrong. What I propose here is that yes, it is good for us to increase VAT. However, it should not be done in 2025. It should be delayed to 2026. Reason being that lest the government use 2025 to stabilize the economy in terms of inflation, exchange rate, and all that. So, and even fuel prices. So, let fuel prices and exchange rate be stabilized in 2025. So, when those the prices of goods and services are relatively okay or stabilized, then you can ask, okay, you are introducing the increase in VAT by 2026 to 10%. So I said 2026 and 2027 should be 10%. Then 2028 and 2029 should be 12.5%. Then by 2030, you arrive at your 15%. So that is what I am recommending here. Now, there are other things again that are important, which is not in the public space. So for instance, The committee members are saying that basic food item, rent, transportation will be exempted. I don't know why they are putting forward that narrative. The truth is that as we speak, those things are not vatable. So how will you now exempt what has been exempted? You understand? So I don't think that is a good narrative that they should put out there, because they are not doing anything new. Rather, I will even say that some of the things, some of the proposals will work against government itself, because we're talking about revenue generation. Meanwhile, you have moved most of the basic item or the things that have been exempted to zero rated, right? To zero rated. Now, let me explain zero rated. Zero rated goods and services is that when you are offering or you are selling to the final consumer, the VAT rate is zero. I know when you say 0% on something, the answer is zero, right? Mm-hmm. So you are not, there is no VAT technically. However, the person selling, if they have incurred VAT in producing that goods or to make that service sellable or marketable to the final consumer, they cannot go back to government and say, okay, I have made this supply, my VAT rate is 0%, but I have incurred X amount of input, right? Now, the government is to refund those monies to the taxpayers. So, and we are saying that we need revenue. So we are creating a lot of issues for government to, make provisions for revenue from time to time. So as far as I am concerned, it is unnecessary or superfluous to move items from the current exemption list to zero rated. We have what is currently called the VAT modification order of 2021. That document is robust enough that exempts so many things from VAT. And in the VAT Act, we have only 3 items that are considered as zero rated. So my recommendation is please leave this proposal alone and let's continue with what we have. The 3 exempted and the 3 zero rated goods and services. Then the exempted goods and services as documented or stated in the VAT order, VAT modification order of 2021. So those 2 documents are okay. We don't need this new, what is it called? New proposal of moving item from exemption list to zero rated. Now, another critical factor again that I saw is that on this VAT is that the services of microfinance bank are currently exempted from VAT. So with this their proposal, what that means is that there's not going to be VAT on microfinance transactions. And these are the poorest or most vulnerable people that uses microfinance services. So what are you doing exactly? You are increasing the cost of finance. Another item there that I highlighted was domestic airline tickets. Currently, there is no VAT charge on domestic airline ticket. But with this, their new proposal, domestic flight tickets will now become VAT-able. So also increasing
so to be clear, are you recommending that in this new tax reform bill, domestic airline tickets, should be taxed?
No. So I'm saying that because currently it's not taxed, there's no VAT on it. So I say it should be retained that way.
Okay.
They should not change it. Likewise, services provided by microfinance bank, they should also retain it. Yeah, because currently they are exempted from VAT, so they shouldn't change it. Now, let me move on to the what concerns the governors, the sharing of VAT.
Before you move on to the governors, I know that's an important aspect, but let's still stay on the states. Of course, that is also connected to the governors. Who do you think is well positioned to collect taxes? Because
to collect which of the taxes now?
Yes.
VAT.
Yeah, because the chairman of the Presidential Tax Reform Committee was saying that if states were allowed to collect taxes, then businesses
to collect VAT.
Is going to get, yes, VAT, that's right.
Yes. Well, that is his own opinion. I don't agree with that point, right? And I was going to discuss it anyway from this section I'm going to, which is the Nigerian Tax Administration bill. So there are actually two provisions there. So one of it is section 22, subsection 12, right? Section 22, subsection 12. That is the first provision, which many of the governors have not read, right? And they now move to section 77, right? So section 22 talks about attribution. So attribution simply means that when a company is filing VAT returns, the company should not say, okay, we have 36 states and FCT. If the company operates, let's use a telecoms company, for instance. So the telecom company is now supposed to say, from the 36 states, this is how much was generated in each of those states. So the cost that is made from each of those states, the telecoms company should have the records. When filing the returns, you now say, okay, X amount came from Lagos, X amount came from FCT, X amount came from Abia, just like that, and fine. You understand? So that will now be the basis for what section 77 is proposing. Who say, okay, this is how it is going to be shared. So federal government should take 10%, the state government should take 55%, the local government will take 35%. So 60% of what is generated will be shared based on derivation. Yeah? And who is going to provide the basis of the derivation? It is what the companies have filed, the attribution they have made in their VAT returns. You understand? That is going to be the basis. You understand? So on paper, you will see that it is a fair provision. On paper, you see it that this is a fair provision, and okay, VATs, you are going to be credited with VAT based on the consumption in your state. But it is not the state that are filing it, it is the company. So that is why there is going to be an issue. Now, if it will be some countries, you say, okay, this is good, those provisions will be followed. But in Nigeria, as we speak, that provision of section 22, subsection 12, is going to be subjected to manipulation. It's going to be subjected to manipulation because, for instance, let's take a politician who has businesses, and the head office is in Lagos, right? The head office is in Lagos, so they are going to be filing their VAT from Lagos. And what his company is supposed or is expected to do is that every month you say, okay, how much was consumed from the 36 states and FCT? So you make the attribution. But based on what we know about Nigerians, we are going to have a situation whereby the politician will say, no, Lagos, I am from Anambra, or I am from Sokoto. Put 90% in my state. You understand? 90% in my state. So that is subject to manipulation. It's not going to provide the true picture of what has been consumed in all of those states. Now, another issue again is how practicable it is for companies to really do attribution. How many companies have robust accounting software that will capture all of this? The third thing again is that even though the assistant can do that, the accountant that is sitting down, is he willing to take that pain to go through the process of attribution? So we have a situation whereby somebody will just sit there and say, okay, what is the total VAT we have this month? X amount. Just use percentage. Just use percentage to allocate. You understand? Which will not give us the true picture. So, like I said, on paper, the proposals look great, but implementation, I don't think as Nigeria of today will get it right. One, it may not be practicable. Two, it will be subject to manipulation, right? So we are not going to have the true picture of what it should be, and that is why the governors are raising their concern. So, what is my recommendation? So my recommendation.
That final recommendation as we wind down, I wanted to ask you, as an expert yourself, do you think the governors are right in their calling for this bill to be withdrawn?
Well, no. There are two things here: withdrawal of the bill and what is being proposed. You understand? Now, what the governors are doing is that their concern is germane. They have valid concerns for the provisions that have been made, right? Now, we also know that when there is a government, there are processes, there are protocols or establish administrative protocols that you need to follow. So if a bill has gone to National Assembly, the right thing to do is let the bill pass its course. If it fails, it comes back, right? If the bill fails at the National Assembly, it will revert back to the executive with the recommendations and all that. So that is on one hand. Yeah. Now, on the other hand, given the way bills have been passed recently, and the fact that the government or federal government is adamant in making changes or going back on some of their policies. So the governors will look at it and say, hey, our National Assembly may not be able to reject this bill or propose amendment to the executive. So let it not just even go through the process. Let's bring it back first so that we can iron it out before we send it back. So you can see they have valid concerns, reasons for what they are doing. However, like I've explained, the challenges in the attribution and derivation formula, I have made my recommendations that what should be, so that at least we should be fair to all, right? Now, based on the data available, is that if you look at the amount of VAT being computed, is that about 60% contribution comes from just about three sectors, so to speak. So number one, telecoms, right? Then two, you have financial services. Then three, you have imported goods and services, right? So these three transactions contribute well over 60% of the VAT. So my recommendation is that, one, let us have two VATs. One, we call it national VAT. Then this national VAT will only cover 3 items, right? So telecommunication services, financial institution services, then VAT on import goods and services. So those ones we call them national VAT. And it should be shared equally among the 37 rather. So the federal government and 36 states plus FCT, right? The VAT should be shared equally because those transactions cut across. Now, and let me give you an example of what brought about this thinking. For instance, I may be in Lagos. I can recharge somebody's phone who is in Sokoto. You understand? The money was spent in Lagos, but the person consuming it is in Sokoto. You understand? So the transaction is national, right? So why not we have a national VAT covering these 3 transactions? So that is what the federal government or the federal inland revenue is concerned. Then the states can now apply VAT or administer VAT in their own states. right? So whatever other transactions that is carried out in your own state, whatever thing you collect, that is your own. Now, the question of input VAT, because you're already sharing from the national VAT, you should grant any valid input claim because you are sharing equally from the national VAT. So in your state, for instance, somebody brings in goods through the Lagos port, the person will pay the VAT in Lagos, right? Now, the person takes the goods to Benin to sell. Now, at the point he's selling, he's charging VAT from those residents in Benin. However, he should claim his input VAT based on the VAT he has paid in Lagos port. Now, it is valid because all of you are already going to share from what is collected as a national VAT. So you should also grant input to whoever is selling the goods in Benin City. So that is what I think will be fair to all government and stakeholders. Nobody will now be afraid of they are going to be exchanged or the records are going to be manipulated. So with that, we are good to go. Now, let me address strictly what you said, Mr. Tayo usually said that state will suffer or will go down when they collect duties.
States and will suffer if states begin to collect taxes in Nigeria.
You said who will suffer?
Businesses and the economy. Businesses will suffer. Businesses will suffer, and the states will retrogress if they begin to collect tax.
Okay. From what I've explained now, did you see any retrogression? There is no retrogression. You understand? So you see, my challenge with the guys or the people in government today is that you cannot say is only one way to solving problems. No. The only way, there used to be this movie we used to watch that day, the only way, the hard way. You know, you can't say that. You understand? Because policy itself have options. That's what make it public policy. Yeah. So there are various options that you should take. So one should not say that because you've thought of, okay, this is the process. There's a provision which is in section 22, subsection 12, that says due attribution. You understand? Then you share it this way. And that should be the only way. No. You understand? So you can see the solution I brought here. National VAT, just 3 transactions. Then other VATs, the way you have proposed in the act, you understand? Those ones should be collected by the state. So whatever you collect in your state, that is your own. Then you see share equally from those national VAT on those national VAT on those 3 transactions. So the economy will not retrogress, business will not suffer, nothing will happen. Rather, you are going to now promote competitiveness among the states.
Thank you very much, Dr. Chris David, for joining me again today. Thank you very much.
Oh, okay, thank you very much.